So is the inflation moderating fast enough for you and for the Fed?
Well, it's starting to. You know, we had nothing but bad news on inflation for my last year as vice chair and most of last year. But for the last several months, including today, inflation, even on a core basis, is starting to come down. You know, if you take the last 3 months and annualize them, it's the lowest rate of inflation in more than 2 years, under 3%. That's not far enough, but it's definitely good progress, and I'm sure the Fed will take it going into next week's meeting.
So if it's good progress, Rich, why does the Fed have to keep raising rates?
Well, part of the reason why inflation coming down is the Fed's tightened financial conditions, and they've indicated that they think they need to do some more. We think rates will end up at around 5%. They'll almost certainly hike 25 basis points next week to 4.75, and then at least one more in March. But if the data keep improving, they may rethink their notion of getting to 5.25 later this year, which is what they indicated in December.
So it's not that far off with where the market is. I think we have the path of expectations for the Fed funds futures. Market expects them to keep raising, I think, till June, but then for rates to come down to 4.75 in October and down farther from that in January 24. Is that off, or are they just ahead of the Fed?
No, I tell you, sir, there's a little bit of a misinterpretation, I think, in some of the data. You know, the Fed's rate projections are really what they call their modal or most likely scenario, whereas markets have to price in all outcomes, better and worse. And so I basically don't think there's that much difference now between the Fed and where the markets are, because there are some scenarios where the Fed cuts some more and some less. So I actually don't think there's that much distance right now.
So the whole notion of higher for longer, that they're going to raise rates all the way up and then stay high, is that a reality, or you don't see that happening?
No, sir, that is what they're saying, and they've also said they want to keep at it till the job is done. So yes, I do think that once rates get up into that 5% range, that the committee's very inclined to hold them there for a while, certainly throughout, I think, most of this calendar year, because that's what they think will be needed to make sure that inflation is reliably on a path to get back down to 2%. The important thing to keep in mind, Sarah, though, is that their projections also show that eventually they think a more normal level of interest rates is around 3%, maybe 2.5%. So I think as long as they keep that view, once the inflation numbers sustainably improve, they will be easing at some point.
Right. But and also, what about unemployment? I mean, if it gets worse, every day there's another company announcing layoffs. Hasn't really showed up in the data, but it will, don't you think? And the economy could worsen, and we've got major debt servicing coming up here from the U.S. Treasury. Aren't all these problems for keeping rates very high for a very long time?
Well, there is a lot to worry about, but it's also a big problem if inflation gets out of hand. And so I do think that the path that they've laid out makes sense to me. There is some rise in unemployment that likely will be required. The Fed itself has penciled in about a percentage point. I really think there's a lot of uncertainty, Sarah, about the post-pandemic labor market. And I think as the year goes on, we'll get a better sense of how much adjustment in the labor market is needed. But you're right, so far we see the headlines, but the overall employment data is still very strong.
So you think we'll avoid recession this year in the U.S.?
Well, you know, recession is sort of a technical term that the NBER applies, and sometimes with a lag. I think we are going to see a growth slowdown, but there have been downturns in the U.S. that are called recessions in which growth is actually positive for the year. So I don't see any need right now for there to be a deep or prolonged downturn or recession. But there will be some rise in unemployment likely and some slowdown in growth, and maybe at some point it'll be declared a recession.